The only negative right now is I hear people saying, oh, we missed it. Are you joking? Maybe the national anthem has ended. Maybe we're in the first inning, but the game's barely started. I mean, we are at just the knee of the curve. So if you think about an S curve, you get 10 years for the early adopters, 10 years for the middle 80%, and then 10 years for maturity. We're just entering that second decade. First 4 years, science experiment, doesn't really count. The next 10 years, real. This year, real. But we're not even a year into the upward slope of the S curve. And so to say you missed it, not even close.
Recent data from BitMax Research has shown that the Grayscale Bitcoin Trust, GBTC, experienced a record $643 million in outflows on Monday, March 18th, marking the most significant daily outflow the GBTC has seen to date. Following this revelation, Bitcoin's value plunged from a high of over $68,000 to a low of $62,000, reaching its lowest point since March 5th. Although there has been a slight recovery in Bitcoin's price in the past few hours, it remains approximately 12% lower than last week and has decreased by about 7% today alone. Despite these short-term corrections, the consensus among many in the cryptocurrency industry is that we are still in the nascent stages of what could be the largest crypto bull market in history. Over the past few months, numerous esteemed crypto investors and analysts have voiced their belief that the entry of institutional investors, particularly through the spot Bitcoin ETFs, will significantly contribute to an extraordinary bull market for Bitcoin and other digital currencies. Before the approval of the spot Bitcoin ETFs, Mark Yusko, the founder and CIO of Morgan Creek Capital, forecasted that Bitcoin could see an influx of at least $300 billion through these ETFs over the coming years. Yusko based his prediction on the assumption that wealth managers, who collectively manage around $3 trillion, would allocate at least 1% of their funds to Bitcoin ETFs. However, Grant Engelbart, the vice president and investment strategist at Carson Group, has observed that investors are allocating an average of 3.5% to the Bitcoin ETFs. Carson Group, an early adopter of the Bitcoin ETFs, has noted that although only a small number of investors have made allocations so far, the uptake has been significantly more robust than anticipated. In a recent interview with Advisor Shares, Yusko shared his perspective on the upcoming 2024 crypto bull market, which he believes will be a pivotal moment for the industry. Yusko anticipates the start of a parabolic phase in the crypto market beginning in June 2024, which he expects to last until June 2025. During this period, he predicts substantial price increases for cryptocurrencies, including Bitcoin, Ethereum, Solana, and even meme coins. As we share excerpts from Yusko's interview, we invite you to take a moment to like this video, subscribe to the channel, and turn on post notifications to stay updated with more content like this. Thank you for watching and enjoy the video.
We are deeply into crypto summer, although the fun part starts in crypto fall, which will start this June post-halving. You know, I've been talking about this forever, literally. The whole hashtag get off zero. Zero is the wrong number. And we're starting to see that permeate everywhere. So, the early adopters, the nerds, the geeks, the wizards, all that stuff, that happened kind of from, 09, 10, 11, 12, 13 into 17, 18, 19. And that first decade is tough for people to really kind of catch on. But now we have these ETFs, which make it possible to buy without going through all the hassle of having a device and deal with the bearer assets. And it's such a big deal. And I don't think people really appreciate how big. I mean, it's pretty amazing. You go back a year, and a year's not that long, right? But a year ago, we were sitting just around 20K. We had rebounded 33% off the Hurricane Sam bottom of 15K, back when, everyone was like, oh, it's going to zero. Like, zero is a really big difference from $15,000 per coin. Now, it was zero in 2009. mean, literally zero. There was no value in the network. It was a science experiment. People didn't really know what to think. Was this really anything? Today, if you spent any time with Bitcoin, you understand that it is the future of money, right? And by money, I mean the base layer of money equivalent to gold. Beyond that, Michael Saylor's been on TV lately talking about how it's digital property. Even calling it a cryptocurrency is undervaluing what this means. And as more and more people realize that, we went from 20,000 a year ago to over 70,000 today per coin, and a market cap well in excess of $1 trillion. So again, from zero 15 years ago to over $1 trillion. And here are two things for advisors that are really, really important. Actually, three things. One, it is Bitcoin, the best performing asset of any asset that you have in your client portfolios, 12 of the last 15 years. And it's on pace to be, 13 out of 16 because it's winning this year. Okay, so why do most people have zero? Doesn't make any sense. Second thing, the Sharpe ratio, meaning the return per unit of risk, is the best over the past decade of any asset. And it's not close. So again, how could anyone have zero? Doesn't make any sense. And then the last is, and it really underpins that the second, the correlation of Bitcoin to bonds is 0.0, and the correlation to stocks is 0.15. So it's the best diversifying asset. If you look at the Markowitz framework for building portfolios, it's the best diversifying asset we've ever had. Better than hedge funds, better than private equity, better than real estate, better than REITs, better than commodities, better than CTAs, better than cannabis, better than anything. And that doesn't mean those other things aren't good. This is just better. So the light bulb's gone on that everybody has to get in the pool.
Despite the recent sell-off of the Grayscale Bitcoin Trust, GBTC, and subsequent price declines, Binance CEO Richard Tang has revised his expectations for Bitcoin's price, now anticipating it will exceed his initial projection of $80,000 in 2024. Speaking at an event in Bangkok on Sunday, Tang highlighted the substantial inflows into spot Bitcoin ETFs since their approval in January. He forecasts that more endowments and family offices will soon boost their investments in these funds. Tang attributed the potential for Bitcoin's price surge to the decreased supply following the halving event and the rising demand from ETFs. Confident these factors will propel Bitcoin's price beyond his earlier $80,000 prediction before the year's end. However, Tang also cautioned that the crypto rally would experience volatility, noting that the market's ups and downs would ultimately benefit its growth and stability. Echoing Mark Yusko's sentiments, Tang expressed belief that the bull market is only in its infancy, signaling an exciting phase of growth ahead. Now let's return to the interview.
So in the beginning, every 10 minutes, they would create a block. And in order to create a block, you have to have miners, which are basically just computers, to cryptographically secure that data, create a hash. Okay, and in order to entice someone to buy computers and pay for electricity and do this, you pay them what's called a block reward. So the way Bitcoins were created is every 10 minutes, back in 2009, 50 Bitcoin were awarded to the miners. Every 4 years, that number gets cut in half. Well, if you think about that, the genius of it is if you cut the rewards in half, well, then some of the miners would go out of business. Well, the miners don't want to go out of business, so they hold their Bitcoin longer until the price rises, because that's how markets work, right? People say there's more buyers than sellers, or more sellers than buyers. No, there's always the exact same number of buyers and sellers. That's how a transaction works. It's the price that adjusts. If a buyer wants to really buy, like right now, every day, money's going into the Bitcoin ETFs, those ETFs have to buy. They don't have a choice. They must buy. So they are price insensitive. No matter what the price, they've got to buy it. The sellers, on the other hand, are like, I don't have to sell. So you know what? Unless you pay me more, I'm not going to sell. Now, if they need the money really fast, like say the electricity bill comes due, they're like, I just got to sell, no matter what the price, no matter if the price is falling or whatever. It doesn't really matter. So supply and demand have to balance. But if the price then starts to rise, well, what happens? Well, that causes attention and that causes activity. And so we get these cycles where the price starts to go up. And the problem with the price going up of anything, whether it's NVIDIA shares or MicroStrategy or Bitcoin, the gamblers start to come in. They're like, oh, look how high this is going. I'm just going to buy it. Did you do any work? Well, no, it's just going up. I'm going to buy it. And so it pushes the price to crazy town. So that was 2017 at 20,000. The fair value of the network was 10,000. We got to 20,000. In 21, the fair value of the network was 31,000, and we got to 68. Well, eventually, the kid says, hey, that guy's not wearing any clothes, right? The emperor has no clothes. And the price will adjust, and that's crypto winter. So we went through crypto winter in 21, and we went all the way down, right? All the way down to 15,000. Way below the fair value, because the fair value had started to creep up into the 40s. So we were way below fair value. Well, then what happens? Well, when any asset, again, whether it's a cannabis stock or, a bond, it doesn't matter. If the price is below the fair value, because that's one of the things about price. Price does not equal value. In fact, John Burbank, one of my good buddies in the hedge fund, said price is a liar, right? Price has nothing to do with value. Price is just what two people agree to exchange a small amount of good or service. The value is what the value of the asset is. So when the price was 15 and the fair value was in the 40s, I'm waving it in. Like,
come on in, yeah.
So I'm going to buy it. So that was a year ago. And for the last year, we went from crypto winter in 21 into crypto spring, right? Which is where the price kind of stabilizes. Then crypto summer, which we're in today. Right? So from June of 23 to June of 24 is crypto summer. And crypto summer is where you start to get back to fair value. So fair value today is in the low 50s. Well, we got there right before the ETF launch. And now we've exploded up to 70. It's like, what's going on? Supply and demand.
Meanwhile, MicroStrategy has expanded its Bitcoin holdings with an additional purchase of over 9,000 Bitcoins, as announced by Michael Saylor, the firm's founder and executive chairman, in a post on X. Saylor shared that MicroStrategy invested approximately $623 million, sourced from convertible notes and excess cash, to purchase 9,245 Bitcoins at an average price of around $67,341 per coin as of March 18, 2024. With this acquisition, MicroStrategy's total Bitcoin holdings have reached 124,246, bought at an average price of $35,100 per coin, amounting to approximately $7.533 billion. This significant investment positions MicroStrategy as holding over 1% of Bitcoin's total maximum supply of 21 million coins, marking a significant milestone for Saylor and the Bitcoin-focused enterprise. In related news, Standard Chartered has revised its Bitcoin price forecast upwards, influenced by the unprecedented trading volumes and substantial inflows into spot Bitcoin ETFs observed within just 2 months of their launch. The bank now anticipates Bitcoin reaching a new all-time high of $150,000 in 2024 and escalating to $250,000 in 2025. Jeff Kendrick, head of crypto research at Standard Chartered, attributed these revised price targets to an analysis comparing Bitcoin's trajectory with gold's performance following the launch of gold ETFs. In a note released on Monday, Kendrick stated, "We believe the gold analogy, considering both the ETF impact and the optimal portfolio mix, provides a solid foundation for estimating Bitcoin's medium-term price levels. Should ETF inflows hit our midpoint estimate of $75 billion, or if reserve managers start purchasing Bitcoin, we see a strong possibility of prices surging to the $250,000 mark at some point in 2025. We welcome your thoughts on these developments, including Yusko's market predictions and MicroStrategy's latest Bitcoin acquisition. If you haven't done so already, please like this video, subscribe to the channel, and activate post notifications to stay updated with more content like this. Thank you for watching.